Hey guys, Joe Franklin, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets, talking about some of the themes that could be shaping the price action this week and some of the stuff that's been going on. So let's jump straight into the charts. You can see here, I've got the Dixie one-day candlesticks, a bit of a bounce here on Monday, being driven partially, if we just take a quick look at yields, if I can get the code right. Uh, 2-year yields actually breaking a little bit higher. I mean, just from a technical perspective, um, looks like there's some technical selling of yields or selling of bonds, which when bond prices move lower, yields move higher. In wake of this breakout above this short-term bearish trend line that we had, we did have some strong US data today. US Empire State Manufacturing Index surprisingly jumped into expansionary territory for the first time, I believe, in 5 months, or yeah, the first time since last November, which kind of goes against the grain of some of the other economic data that we've had recently, like the weak ISM data that we had a couple of weeks ago, and some other prints which have been a bit worrying. So just raising a couple of question marks as to what's actually going on in the US economy. Are we actually slowing down as much as we thought? Not sure, mixed signals, but enough to be pushing yields higher. You can see the 10-year yields higher as well. Um, this is obviously pushing the Dixie up, as we said, although I think you could probably say that the Dixie's still in a short-term downtrend, as can be marked up by linking up these more recent highs and lows, still below the 21-day moving average. This might actually be a nice area to get back short, potentially. But we can talk about that more, but perhaps in tomorrow's trade idea video. But higher yields, stronger dollar means that gold selling off a little bit. See Bitcoin also selling off a little bit. Still close to recent highs for both of those assets though. US stocks down a little bit. But, you know, we had some of those bank earnings last week. I think it was Wells Fargo and JP Morgan, both better than expected. And we've got a barrage more of bank earnings coming out this week. It's going to be very important. Earnings is really going to be the biggest driver of the S&P 500 probably in the next couple of weeks. Certainly this week, because actually, if we just take a quick look at the calendar, uh, apart from, I mean, this calendar doesn't have all the Fed speakers that we've got coming up this week. They've only got a few, but we've got loads of Fed speak this week. But apart from that, there's not really that much by way of market moving data. Like nothing today, apart from the Empire State Manufacturing Index, which was already out. Nothing tomorrow. Nothing on Wednesday. Okay, weekly unemployment claims, and then the Philly Fed, which is another regional manufacturing index. That'll be interesting. Home sales, not usually market moving, but we keep an eye. And then the flash PMIs on Friday. So I mean, we got some data to be keeping an eye on, but earnings really for equities anyway will be the big thing, and we'll be keeping an eye on that Fed speak as well. With regards to the Fed, by the way, markets, I think the last I saw it was an 87% probability implied by markets that the Fed is going to do one more 25 basis point rate hike. But the expectation is still very much that that will be the last one, as the US economy weakens, as the threat of a bank crisis, we could put it that way, rumbles on. But for now, stocks in a good position, like close to the highest levels of the year. Same with the Nasdaq, very close to the highest levels of the year. You can see here it's still within its longer term uptrend, still holding above the 21-day moving average. So, medium term technical still looking good. What else is there to talk about? That's pretty much all of the asset classes gone through. Let's just return to the calendar because, as you can see, quite a lot of stuff going on outside of the US. So it's a busy data week in the UK and Canada. You got UK jobs data on Tuesday. You got UK CPI on Wednesday. UK retail sales on Friday. So any pound sterling traders should be watching those data for the outlook for the UK economy and the outlook for Bank of England tightening. Also a busy one out of Canada, like I said, CPI Tuesday, Bank of Canada governor speaking, retail sales on Friday, and then Chinese GDP as well, out early Tuesday, Asia Pacific session. are expecting an uptick in the pace of growth as China reopened in Q1 and did all this stimulus as well. And actually, you're seeing the Chinese credit impulse has been rising and other things that basically mean they're injecting liquidity to pump their economy. What else have we got? New Zealand CPI, that'll be an interesting one for the Kiwi. And then on Friday, we got this big barrage of the flash PMIs, which is always very interesting. Um, it generally moves euro dollar, cable, these kind of pairs. It's like one of the earliest insights you get into how these European and UK economy and the US economy as well, actually, to be fair, are performing so far this month. But yeah, guys, that's pretty much everything for this video. I hope you all enjoyed it. I hope you all found it informative, and I will see you all in the next one.